We're going to do a brief video on SP500 bear market, and we've got a daily chart of the SP500 E-mini futures contract, which we're using as a proxy. It's a great proxy to use, very high volume futures contract for the SP500. We've got a green 5-day moving average on here, a red 20-day moving average, and a 200-day blue moving average. And we're taking a look real quick. If we see, we're clearly in a bear market. We're below the 200-day moving average, and as you can see, we spread out severely down here all the way in terms of the area under the 200-day moving average. And when you get a tremendous expansion of area under the 200-day moving average, you're going to get a rally. You can see right here we had this huge inverted triangle, and we got a rally. You see this huge inverted triangle here, and you get, it would be from here up. This distance is what we're talking about, but it creates a lot of area, and you can see we got a rally. So this SP500 is respecting the 200-day moving average. In general, it oscillated across here before it decided to definitely go into a bear market. That's what it did down here into June, and then it rallied up here and bounced right off the 200-day moving average on August 16th. So what's going on right now? Well, the reality of it is we're below the 200-day moving average. The price is below the 20-day moving average. The 20-day moving average is trending down. The 5-day moving average price is below that, and it's starting to roll over a little bit, which is not a huge deal. But you can see it was straight as an arrow all the way down here, and it's rolling. It went up a little bit. Now it's rolling back over. So this SP500 is still in the bear market. There's no doubt about that. The sell-off that we had here, I wouldn't say it's predictable, but I did a video few days ago on how these big moves in the SP500 are fairly common. Here's one down here. They're all over the place. If you look through here, carefully, you can find big sell-offs right here. You can find 100 to 200 point sell-offs in the SP500 all the time. This one was over 200 point sell-off, and it was a little, granted, it was a little unusual in that it happened in about a minute. To the bulk of it was done in the first minute, so that's going to take the varnish off of you if you're long the market. But at the end of the day, this SP500 is in a bear market, so you're going to get those kind of sell-offs in any market, but you're especially going to get them in a bear market. You got one right here. This one was what, over 150, doing the math in my head. But the difference was everybody kind of knew it was in a bear market. You could see that we were headed down. In this one, we were headed up. And without this 200-day moving average on here, people don't really know what's going on. So that's why the moving averages are so important. Not to predict what the market's going to do, but to give you some context as to what the market's doing. If you take this 200-day, if I were to just click this button and take this 200-day moving average out of here real quick, you would lose all context as to what's going on. But when you put it in here and you stretch it across, you can clearly see that's a bull market, that's a bear market, and the defining indicator is this 200-day moving average. Is it perfect? No, but it's really good. And so we're still in a bear market on the SP500. I don't see anything technically to say that we're going to get out of this here in the next 2-3 weeks. A lot of people probably thought we were going to get out here, and we easily could have closed above and been right here today, but we're not. So we're still in a bear market. In order to get out of a bear market, several things need to happen. We need to hold this bottom right here. This bottom put in September 7th. We need to, you can come down a little bit, but you need to get this price up by the end of September, the last week of September. You need to get this price back up here to 4,100, and you need to get underneath of it the 20 and the 5-day. If you get that position there by the end of September, early October, get to about 4,100, you can then rally up and challenge this 200-day again, and that's what's got to happen. Do I think this is going to happen? I really don't think that's going to happen in terms of a successful challenge to the 200-day moving average by early October. No, I don't think it's going to happen. I think we're going to have some range-bound trading in through here, in between 4,200 and probably down as low as, probably low as 38, maybe even down here to 3,800, which is no big deal. It's not, still approaching the lows put in made in June of 36.39. But I think we're going to have some range-bound trading here probably until the end of October, where I think we'll be ready to make another stab at the 200-day moving average. Keep in mind, we're talking about the S&P 500. So you have not just the technical setup, but you have huge fundamentals weighing on it. You have this huge election coming in November. You also have a resolution possible for the Ukrainian situation. Those two things are weighing hugely on the SP 500 right now. Remember, it is an index. So let's take a look and see what RBAM research says about the SP 500 today. We cover the SP 500 two different ways. We have a futures contract that covers it. If we can find it right here. This is out for the 15th, which is today. And the SP 500, they're talking about shorts, 39.86 across the board except for the 20-day. So these are 1, 2, 5, 10, and 20-day hold periods. And you're not going to find shorts for the SP 500 on this system on a 1-day hold. We'll have some buys on 1-day holds, but your shorts start on 2-day holds for this SP 500 futures contract. This is the Chicago Mercantile Exchange futures contract, the E-mini. So we're looking at 39.86. Let's see where the market is. All right, now I don't know if this is updated yet, but it's saying that it has not traded through that yet. So it hasn't rallied high enough yet to short, if that makes any sense. So it has not gotten to our target range to short yet. Keep in mind this is all for entertainment purposes only, but we do put those out every morning before 7 a.m. The way they work, 1-day hold, you buy today or take a position today, close it out by the end of trading tomorrow to loss, or take your profits sooner if you get them. Same thing with all these. If you were to go all the way out here to the 20-day, you'd buy or short today and take a profit as soon as you got it, or close it out at a loss at the end of the 20-day holding period. So that's how these work. Let's take a look at our trend following system, because we cover, if we can find it here, we cover the SP 500 in a traditional trend following system, if we can find it. It is here somewhere. Right here. So this is a traditional moving average trend following system, although it's a very sophisticated one. This is not up on the website. Everything else I've showed you is up on the website every day. Absolutely no cost and no credit card required, and I'll show you how to get them in a minute. But this one is a beta system that we've got up. The system's fully testable. We just don't have it public yet. We show it to YouTubers. But if you look here, this is a SP500 futures contract that we put at the top. The rest of these are stocks, and it's showing short today. At 39.81 and 25, whatever you want to call it, 0.25, 39.81, and it's showing a short position. This is a 30-day hold, so you'd get in, take your profits as soon as you get it. Worst case, get out at a loss at the end of 30 trading days. So 39.81, did we get there yet? I already forgot. Let's take a look. So that's the exact high for today. It's put that out there. So I doubt if you could have got in at that exact high, but it is triggering a short. So you can get all of our quantitative entry prices for entertainment purposes only at rbamresearch.com. We cover 190 stocks. We cover the major forex pairs. We cover BTC for crypto. As I just showed you, we cover the most liquid futures contracts, including the SP 500. Everything but the stocks are longs or shorts, as I showed you with the SP, and the stocks are longs only. They're out by 7 a.m. Monday through Friday at rbamresearch.com. There's a link in the description below. There's several things I want to communicate. The first thing is we're interested in your comments on moving averages. Please leave us a comment if you like moving averages. If you don't like them, please tell us that in the comment section below and explain why you don't like them briefly. If you like this video, please click the like button. If you want to subscribe, please do that. Keep in mind, all of our commentary and our entry prices are for entertainment purposes only. You can't use them for anything other than entertainment. You should do your own analysis always, and you definitely trade at your own risk.